Hello everyone, we are Team 151 and we will be presenting our credit research report on Bharti Airtel. So let's get started. We'll start with a brief history about the company and its business description. As you can see from the flow, Airtel started its business in 1996 from a few cities and from there on went on to become India's largest wireless service provider in just 8 years in 2004. In 2018, Airtel is a world-renowned brand and one of the largest players in India's telecom market. Coming to its business description and the business verticals in which it operates, we can clearly see that the mobile services or the wireless services is by far the biggest contributor to its business. Some other segments in which it operates are the home services, the digital TV services, the Airtel business, the tower infrastructure and the all-new Airtel Payments Bank. Now we'll look into the management positioning of Bharti Airtel. As you can see from the hierarchy tree, it is headed by the chairman, Mr. Sunil Bharti Mittal, followed by the MD and CEO of India and South Asia, Mr. Gopal Mittal, and a core group of experienced and astute leadership in the form of 3 non-executive and 6 independent directors. Each one of them is responsible for the proper functioning of their respective board committee. There are 6 board committees in total, namely the audit, the risk management, the HR and nomination, the stakeholders relationship, the CSR, and the committee of directors. The last few years has been really good for Airtel in terms of awards and recognitions. As you can see, they have covered all the phases of our queue with the laurels, the brightest being featuring in the Forbes list of world's most innovative companies in 2017. Now, we'll go to the company overview, and for that, we have done some industry-specific analysis. The factors that we have taken into consideration are the mobile churn rate, the ARPU or the average revenue per user, and the customer base, all of which are very strong indicators for the concerned industry. We'll start with the mobile churn rate. The time frame considered here is from the first quarter of 2016 to the last quarter of 2018. As you can see, the churn rate has been increasing from 3.3% in Q1 16 to 4.1% in Q3 17. This can be attributed to the entry of Reliance Jio into the market at that time, which led to a lot of subscribers switching their loyalty from Airtel to Jio. Since then though, it has been much more in control and had reduced to nearly 2.8% by the end of financial year 2018. It must be stated here, all of it was happening while they were in line with the industry. Now, we'll come to the ARPU. In case of ARPU, the fall was quite significant. It had fallen by about 41% during the same time frame from Rs 198 to Rs 116. Quite a substantial drop. Now, coming to the customer base, it shows a very interesting picture. If you look at it at a glance, it seems to be working very well as line has been continuously increasing. But if we dig a little more deep into it and divide the 4-year time frame into 2 years each, we'll find that the growth in the customer base had reduced from 21% in 2014 to 16 to 16% in 2016 to 18. So why is it happening? The market is far from being saturated as the rural India is still highly untapped. So our research says that it is again Reliance Jio that has been eating into the market share of Airtel since its launch in 2018. Now we have also done a study on the competitive positioning of Bharti Airtel. As you can see, the blue line here shows the subscriber share of Airtel, followed by Vodafone, Idea Cellular, and in comes Reliance Jio, the red line in 2016. Now, as we all know, Airtel is, or rather was, the biggest player in India's telecom market for the last decade or so. But it has recently lost its position after the Vodafone Idea merger in 2018 August. Now, it is currently second in the market in terms of subscriber base with a market share of 29%. The Indian telecom industry right now is in a lot of disarray, mainly due to the constant price war that was initiated by Jio and had struck everyone very hard. ARPUs are falling, operating margins are dipping, and the entry barrier is the highest in the last 15 to 20 years. Now, we'll carry on our research and move on to the capital structure analysis of the firm.
Now, let's take a look at the capital structure of the firm. The total promoter shareholdings in the firm is 67.14%, of which 50.1% is owned by domestic promoters and 17.04% is owned by foreign promoters. Foreign institutions own 17.15%, followed by mutual funds and NBFCs with 8.67% stake in the company. Significant promoter holdings indicate efficient management and prospect for future growth, while the ownership of mutual funds and foreign institutions indicate faith in the firm and its value creation. Moving on to the next slide. If we see the left hand side of the slide, we can see that the debt to equity ratio of the firm is increasing while the long term debt to equity ratio is falling. This is mainly due to the rise in short term debt of the firm. The short term debt rise can be attributed to the rise in capital expenditure which has been financed through short term borrowings, interest accrued but not due, and payables against acquisition of Qualcomm Asia Pacific Pte Limited. A high increase in short-term debt can be problematic for the firm due to high cycle risk and a possibility of asset liability mismatch. Now, if you see the right hand side of the slide, there is a 25% hike in the net debt to EBITDA margin over the past 2 years. This is likely to further slow down the growth of the firm. The EBITDA of Airtel is continuously decreasing due to huge competition and falling prices. The low price of bundled services is likely to exert short-term financial pain on the company. Next, we will have a look at the financial analysis of the company.
If you start with the graph here, you can observe a decline in revenue and EBITDA by 12% and 14.5% respectively. If we further analyze the market segments in which Airtel is operating, we can observe its core operation, which is mobile services, taking an 18% hit in the last financial year. This is due to the entry of a new player in the market, which has changed the whole dynamic of the industry. The next slide is of return on equity and return on assets. We can observe ROE taking a hit of 83% over the past 2 years. This is attributable to the decrease in service revenue, which includes usage, subscription and activation charge of various services which Airtel is providing. The ROA has taken a hit of 84% over the past 2 years. This is due to an increase of 60 billion rupees in tax recoverable under the current assets category. Now, moving on to the next slide, we have one graph over here which is showing the EBITDA level of all the industry players. We can observe that Airtel is the market leader here, but it is acting against the industry trends, while its network of operating charges are increasing, which includes passive infrastructure charge, power and fuel, and etc. The graph over there is the graph of market share by revenue. Airtel is again the market leader here, but a threat to its leadership is imminent, which is Vodafone Idea after their merger in August 18. If we merge these two graphs, we obtain EBITDA margin, which further validates our observation in the other two graphs. Moving on, we have observed the churn rate of all the market players. It is interesting to notice that in quarter 1 of FY19, the churn rate of Airtel was 2% per quarter, but it increased to 7.3 in quarter 3 of FY19. Again, Airtel is acting against the industry trends. The average revenue per user graph. It must be highlighted that the difference between ARPU of Jio and Airtel's ARPU in such a short period of time of the presence of Jio in the market is alarming. Now we'll start with the liquidity position of the company. In the first graph, there are different ratios given, like current, cash and quick. For example, take the current ratio. In FY17, the current ratio is 0.29, which has increased to 0.3 in FY18. This is a positive signal. But when we analyze the notes to accounts in company's annual report, we found a 50 billion rupees investment in short-term mutual fund. Well, this is not any increase in trade receivable. This is a financial asset increase. I don't know whether we have to attribute it to their operations or not. Second graph is interest coverage ratio and total liability. The ICR has been falling in the past year. Well, it has to be attributable to the falling revenue, which is having a cascading effect in EBIT level. The total liability in that same graph shows a staggering increase in that level, which is basically of one nature, which is non-convertible debenture. Now we'll further analyze the liquidity position of the company and give our investment recommendation.
So now we come to the accounts receivable and the accounts payable snapshot of Bharti Airtel. Here we can see that the accounts payable has shot up by 26.2% CAGR from FY16 to FY18. It is to be noted that inventory levels at this point of time for this period have slightly come down. Hence, there is a direct hint that the company is getting highly dependent on various lines of credit from its suppliers and other sources as well. At the same time, when we see the net working cycle, we can see for FY16, 17 and 18, it has consistently been below minus 200. This is primarily attributed to the reason that most of the revenue earned by Bharti Airtel due to its business model is unearned revenue, is a prepaid income. Hence, the net working cycle is negative. At the same time, we know that the revenue generation for the last 2 years has been quite an issue for telecom sector companies. Hence, we can see that the asset turnover ratio has also been declining, given the fact that the asset base of Bharti Airtel has been almost constant for the last 3 years. Now we move on to the CFO sales analysis, and we cover an interesting case of the total liabilities between FY17 and 18. If you look at the CFO sales analysis, we see that the cash flow from operations has not kept in line with the sales. It has also, the CFO sales ratio has also fallen from 22% in FY17 to 19% in FY18. At the same time, if we see the total liabilities from FY17 to 18, they have shot up by 8.3%. This is primarily attributed to two factors, one being accrued interest but not due of rupees 21,000 million in FY18, and the second being the issue of non-convertible debentures worth rupees 30,000 million in FY18. At the same time, the CFO PAT also has been rising significantly. This is primarily attributed to the reason that the depreciation of heavy assets of Bharti Airtel, which is primarily capitalized over a period of years rather than expensed. Hence, this is actually an after effect of depreciation expense. Now we move into the investment analysis of Bharti Airtel. These are various factors which play a significant role when it comes to assigning a rating and finding what this company's outlook is good or bad. The key rating drivers which we have shortlisted here are positive as well as negative in nature. The positive being the high customer potential. Given India's young demographics, we all know there is a lot of scope when it comes to the mobile market as well. And the same stands for the boost to telecom manufacturing companies. We know that a lot of companies in India have set up in the last 5 years making mobile phones. Hence, there is a lot of push by Make in India pushes as well. But it is evident that the negative factors definitely outweigh the positive ones. There is fall in ROA because of jacking up the financial leverage, which we saw earlier in the total liabilities slide. The high spectrum cost has also been an issue of late, and there is increase in short-term debt, and there is a high churn rate in this telecom industry right now. At the same time, the mobile ARPU values have also been falling. Hence, in the next slide, we divide these factors on a scale of low, medium and high. Now we have divided these factors separately. Now the factors like short-term debt, rise in net debt to EBITDA, fall in ROE and high churn rate, we believe that these factors go a long way when it comes to affecting the financial performance, and hence the rating we assign to Bharti Airtel. At the same time, factors like falling ARPU, market consolidation that is presently happening right now, these have medium-term impact, and the high customer potential, although a positive, has low impact when it comes to assigning a rating to Bharti Airtel at this point of time. Now, in order to provide a credit score to Bharti Airtel, we have used the alternate Z-score analysis for non-manufacturing firms. Hence, we have calculated a value of 0.94, which lies in the distress region of the scale. This shows that there is a high probability of a financial embarrassment happening to Bharti Airtel in the near future. Now we come to the crux of our presentation, that is the investment recommendation. Now, based on the factors which we discussed in the previous 3 slides, and we set a rating of B- on a scale of A+ to D, A+ being the highest and D being jump. So, with a rating of B- and an outlook of negative in the short to medium term future. This is primarily because there is high amount of uncertainty when it comes to the debt level of the company as well as the ability of the firm to maintain its present level of profits. Hence, another important point to be noted is there can be a high downward pressure on the ratings and even a re-rating for Bharti Airtel if it is not able to sustain its present cash flow from operations and its earning levels. Hence, this was all from our side on the credit research report for Bharti Airtel. Any data quoted in the video presentation and not present in the PPT is taken straight from the company's annual reports. We thank you for this wonderful opportunity.